All right, traders, I'm back again. Just want to do a quick update on the US dollar yen trade I was in yesterday, and I'm going to show you what happened. I got stopped out for a 20 pip profit, and yesterday I showed you where I entered this trade. I entered right here, right at the break of this level right here, because I saw this bearish engulfing candle, and it was a strong indication for me because there was no top here, no wick at all. There was no shadow on this candle, so that let me know there was no price action above this candle for the past few hours. And I put my entry order in here, and price continued down to this level here. And then last night it broke this level with this candle here, closed below that level. So what I did, I saw this candle developing, and I saw this bearish candle developing, getting longer and longer. So I moved my stop loss down and went to bed, hoping that when I got up this would be farther down here and taken off. But I woke up, and not to my surprise, that wasn't the case. I got stopped out for 20 pip profit as we had this big bullish engulfing pattern right here. You see this bullish engulfing candle. It's engulfing this body of this candle. And a lot of times when you see this at support and resistance, these are the levels that I'll trade. I'll trade this. If I was just trading support and resistance, I would have traded this, entered right here, put my stop loss down here, and I would have traded this long. Now I'm not doing that because I'm following the Ichimoku system, and the Ichimoku system is telling me that right now this is a bearish market, and I want to listen to what it's saying. Now you can see that you have downward momentum with both of these indicators pointing downwards as far as the Kijinsen and the Tenkan-sen, but looking what price is doing, price is moving upwards, so that's a divergence there. So it looks like you may have a cross here. Now with the Ichimoku system, you're not going to catch the beginning of a trend, and this isn't a slight trend downwards. You can see that little trend there, and you're not going to always catch the beginning of a trend. Now here would have been an opportunity, but if you followed the rules, you're not catching this trade right here because you got a crossover that's bullish, and you're not going to take a short trade here. And you had this bearish engulfing candle, so if you're just looking at price action, you could have taken this trade, but look where it is in the range, inside the range. There's a lot of times I don't take trades based off of where it happens. I want to be close to support and resistance. I want to have something to back me up. So if I didn't have Ichimoku system here, I wouldn't be able to take this trade because I really don't know. This is like in nowhere land. I want to be close to this, or closer down here where I have something to back me up. But with that said, this would have been a good trade, and there are ways to trade this with the Ichimoku system. I'm not going to get into that right now. But look what happened here. So you missed that, but then you had an opportunity here. Now you did have a crossover. Everything was bearish, so you did have it here. So look how much of that you would have caught. You would have missed this much, but you look like you caught like maybe almost 75% of that move, right? And you missed out on maybe 25% of the move here. Maybe you caught two-thirds, or and you missed out on a third of it. But now, like I said, looking here, you could see how this Kijinsen, the medium-term momentum indicator, is showing us that the momentum is to the downside, but price is telling us otherwise. But that's because you had some lower lows developing. So this indicator is showing you the Kijinsen is showing you the highest high and the lowest low for the past 26 periods. Now this is the highest high and the highest low for the last 9 periods, so it's a little faster than the Kijinsen. So the Tenkan-sen is going to be a little faster. And now it looks like you may get a cross here. They're coming pretty close together, so you get a bullish cross. It's going to be a weak cross because it's in bearish territory. So the thing about it now, if I was trading price action, I would have taken that trade right here, but I'm not. I'm following the rules of the Ichimoku system. And so now, in order for me to take a long trade, I have to wait for price to break the cloud. Now, that could happen anywhere. It can happen here. It could happen down here. It all depends if price is going to continue upwards. But if I listen to the Ichimoku system, I'm waiting still to get into a short opportunity, okay? Because this is all bearish right now. It's still bearish. There's nothing showing us that we should be looking long yet based off of the system. So I'm going to wait, and if I'm following the system, that's what I'm going to do. I'm going to follow the system. Um, this bullish engulfing right here, that's what price seems to do a lot at support and resistance levels, and you'll see that, and that's one of my triggers to get into a trade off of a support and resistance level. Here you see it right here, bullish engulfing pattern at support and resistance. It's at a resistance level. So you had a bearish engulfing pattern right at the support level. Price drops. Nice trade there. This is a bullish engulfing pattern. You would have entered there. Price moves up. Maybe we'll see what happens. So we come back to where this all started out right here. This all started right here basically, and you could see you got a bullish engulfing candle right here covering the body of this candle, bullish engulfing. You take this trade right here, enter the market with your stop loss down here. You would have been safe, and that would have rode you all the way up to the resistance level. All right, so that's if I'm just using support and resistance. I would have never gotten into this trade, using the Ichimoku system, because now here's your crossover. You would have waited for price to get here. Look where you are, right up against resistance. No good. I wouldn't have taken this trade. I would have had to wait for a break there, maybe a retest, a bounce off of this level. And there are some things. Here's a nice bullish engulfing right here at this support level based off of the cloud, but that trade didn't work out. All right, and price dropped down and then went higher. But those are some things I look for at support and resistance levels, and we'll see what's going to happen with this level over here. This is a very good trade price action wise, but I'm still going to wait and see what the Ichimoku system tells me, because that's what I'm trading right now. And then another thing that's telling me that maybe this is a good long trade is the divergence here. Look at the divergence. This is telling you momentum is dying to the downside. There's momentum starting to develop to the upside, and that's going to be with your ultimate oscillator. You can also do this with your stochastics. That'll do the same thing, show you this divergence. And this is the ultimate oscillator, and I think it's the best for showing divergence. Stochastic's not bad. It's pretty good. You can use RSI also. So anything to show you that any kind of oscillator that's going to show you momentum, show you that you got this divergence here. So yes, again, like I said, trading price action, this would have been a very nice entry here, and you would have traded price action with no indicator. You would have just trade here, get an entry here, and try to ride this to this level up here and just monitor your trade. You know, this would have been my signal here right at support level, and support's not an exact level, because I'm going to show you why. Because if I put a line there, right at that level where we peaked out, but I'm showing my support level here, this is going to be a zone, and I'm going to show you a reason why. Because look what happened over here. Price was down here. There's price action down here, so you can't ignore that zone. This is a zone here, and that's going to be all this zone where price can drop into, and price did drop into here. So if you were looking at this level right here just being a support level and saying, oh, it broke support or it didn't, actually the whole zone down here is your support level. So now we got the bounce off of the bottom of the support zone, and now we can see what price is going to do. Okay, so just trading price action, boom, entry, stop loss. You could put your stop loss way down here or at the bottom of the zone. That's going to be a really long stop loss, but look at what you're looking for. Look at where your target could be. So basically that's about 125 pips, 127 pips with a 50 pip stop loss, 52 pip stop loss, if you put it all the way at the bottom of the zone there. You could put it at the bottom of the support level, the beginning of the support level right here, a little bit below that. So there's a lot of things you could do, but I'm gonna wait and see what the Ichimoku system does. And putting so many things on your chart can cloud your decision what to do, because Ichimoku's telling me one thing, the indicator down here is telling me another thing. So it's too many things to tell you do this, do that. So that's why you don't really want to clutter up your chart with all kind of indicators, because you get all different kind of signals and you'll never get into a trade. You'll be so confused you won't know what to do. You don't even need this down here, but this is really good for just momentum, divergence trading, which is, Really the only thing I'll do with an oscillator, with an indicator like this, I'm not going to look for the oversold and overbought levels really. I'm just trading the divergence. So looking here, this will be a very good entry right here. So let's put the Ichimoku system back on here. And I'll show you, oh, before we put that on there, just trading price action, here's another thing that's really good. Go to the daily time frame. Look at the pin bar. Look at the rejection of that level. If this closes out as a pin bar like this, I mean, man, this is really telling you a lot. There's no price action below this level until over here. Candles, you never had any action from, what's this, somewhere in January, well, February till now. No price action below this level. So that's really strong too. So the bounce off of here with this candle showing me this, and the daily time frame, if it closes out like this, I think this would be a very good trade to the upside, ignoring Ichimoku system. Trade this to the long side. So I'll wait at the end of the day, see what this candle does, what if it's going to close here, if it's going to be bullish, if it's going to be a bullish candle closing above this level, and see what happens. And maybe we could take this for a long trade off of support and resistance levels without the Ichimoku system. All right, so that's what I'm looking at, and that's it, traders. I'm gonna have the hangout tomorrow, so we'll discuss all this tomorrow. Be able to get some Q&A, so you guys can Q me and I'll answer. But other than that, traders, until next time, hope I'm helping somebody, and God bless. So long.